Ladies and gentlemen, good morning, good afternoon, good night, wherever you are. This is Bravo, and welcome back to another episode. So today, ladies and gentlemen, we are having market analysis on gold, what's happening, what to expect, and how to capitalize on these moves. Because to be really honest, this is the best time in history to be trading because the market is moving, and we just want, you see, the good thing about a volatile market is you don't waste your time to make or lose money. It's so quick. You either lose money quick or you make money quick. So we want to make money. That's the whole purpose of this channel. And we want to analyze and make educated speculations on what to expect, because again, remember guys, trading is risky. Do not take anything I say as financial advice, because I'm not a professional. In fact, you should not even listen to me at all. That's it and done. That is how I trade the market myself. So I approach the market in very simple terms. I try to simplify them for anyone watching, because again, I understand not everyone is in that technical aspect of understanding the deeper analytical things, but sometimes we can try make them look easy, or at least break them into smaller chunks so that someone can emulate the same model and maybe get almost the same results that you're getting. So ladies and gentlemen, I'd shared this analysis on Telegram last 2 days ago, I think a day ago, before when we were here, and my whole purpose was to try and bring clarity to you guys. So I want us to start afresh. So to recap, I think I'll also have to have another chart with me here, just a minute, because I want us also to look at silver and something else as well. So just a moment. So in one of the previous videos, we brought the idea of SMT and the idea of correlationship, and you've seen that thing work like wonders. But we did direct correlationship, like direct correlationship between gold and silver. That is what we did last time. But today, what we want to bring now into the table is inverse correlationship between now gold and dollar, because inversely proportion means things have to work opposite way. So for something like DXY, because we are looking at DXY as well, because we are trading against the dollar, right? So we are trading gold against the dollar. Our analytical expectation, or rather our structural expectations, is we are expecting bullish gold moving forward, but also we kind of expect a bearish dollar at some point. But now I wanted to show you guys how we use the correlationship to be even to reduce our risks, because the whole point of trading is trying to reduce your entry risk and then holding when it's necessary for you to hold. You see, sometimes you have to calculate best positions for you to buy. Whenever you want to buy that best item that you're looking for, maybe it's a car or whatever you're looking for, you want to buy at a season where there is a lot of discount. So if it's maybe October and you want to buy maybe a phone, it could be the best idea to wait until November for Black Friday to get the same thing but on a cheaper price. That's the whole point, even when it comes to gold and silver. We want to buy at a low price, but also we want to release that item, or rather we want to sell it or give it away when we are making profits. So we want to buy at heavily discounted regions. And this, as a trader now, you need to understand where are those regions that are heavily discounted, and at what part, because there is a difference between a trader who is emotionally engaged and there is a trader who is analytically driven. Like, you have a reason to wait, or rather to buy at a specific area, and because it's confluential, you have to have confluences on why and where do you buy. So in this channel, what we do is we have to have those reasons why we buy, and we have to have reasons of where our expectations are to buy or to sell. So in this case, we talked about one of the reasons. You see, we are going back now on the drawing board to remember the kind of expectations that we have. So for us, there is one thing that we said. There's something we called range last time, and sometimes you might be looking at a range that is a very minor range to check at. That's why I said whenever you see things are not clear, probably you're in a smaller time frame. So get out to a bigger time frame and see things on bigger perspective. Because I remember I saw this coming. I actually saw this coming and I exited before. I actually exited here. It went again higher because I expected that, and it fall. These expectations are not expectations of just speculations. These are expectations that are backed with confluences for specific reasons why we should sell at that specific area. So that is what I'm trying to show you and share some insight, so that moving forward, when you look at a chart, you don't just look at each candle at a time. You see structure, you see opportunity, you see ranges, you see things that you're supposed to be looking at. So one thing that I brought to attention is stop looking at smaller ranges. Look at this range from this area that I pointed out to this low. The reason why I had this range, because it was one of the closest big range on a bigger time frame, because like you can notice, I'm on a 4-hour time frame. So each candle represents 4 hours, so it's a long time. So from when I have my Fibonacci from this low to this high, like you can clearly see our point of interest, why we say this is our optimal trading zones. Whenever the price came to this region, you can clearly see we came, filled this. First things first. Let me come here. So whenever you realize the kind of range you're dealing with, if this is your range from this low, if this is your range from this low to this high, and your expectation is a reversal before continuation, in most cases you want to see the price at least return or retrace at least 50%. That is one of our confluences. So you want at least a price to at least retrace to 50%. But in most cases, we don't set a buy limit at 50%. It's because we also need to see an extra confirmation. So confluence number one, we have to identify the range that we are dealing with, because you have to identify if you're overbuying or if it's a discounted price. You need to know when a good deal is there, right? So my whole point is, whenever you have your ranges selected or decided, the next thing that you have to do is try to see where, if that price comes to this range, this will be discounted price, because eventually the price will follow the bigger time frames confluences, or rather bias. So if, let's say, we are bullish, of course, everyone knows that in gold, we are still bullish. But anytime you see a retracement, it's an opportunity to buy again. That is how I usually take it. But I don't buy anywhere, because I might buy still on premium prices, and then price tends to go to, to discount, then I lose. So rather than buying but still holding on a big drawdown, I would rather wait until whenever that price comes to a retracement end. Again, let me try to see if it makes sense again. I have my range. This is the last displacement that happened from a specific low to the last high. So my expectation is, if you are retracing, then the best retracement point is at least a half of that range. That's a fair price. That is what we call a fair price, actually. So that's a fair price. But if we find a reason to go below that fair price again to a specific region, some regions with maybe gaps, or rather there is liquidity seated somewhere, and the price wishes to take the liquidity before going up. Now this region becomes a region of interest. Now this is where you start. You don't buy just because it's there. You start, first of all, it's another confluence that is panning out in front of your eyes. So you don't want to miss it. You don't want to miss it, but also you don't want to read it wrong, because it might go lower if you read it wrong. So you have, first of all, you have to nail it when it comes to the range that you're in. That is first thing. So if that fails, everything else will fail. So this becomes a solid you have to find the most preferred dealing range first of all. Now when you find it, then you need to know when is your discount. First things first, we said whenever you realize this is your range and you're below 50%, so it means this lower half, it's a discount. It's below fair price, so it's a discount price. The lower it goes, it becomes even more cheaper to acquire that security or whatever you're buying. But now on a smaller time frame, when you get to that area that you have interest in, when you go to smaller time frame, now it tends to give you a hint that things are changing, because now on smaller time frame, now we start breaking structure now, but on the now opposite, or rather opposite direction. So that is when now we capitalize on these areas, but now we buy and hold to break these highs. This is how we are looking for. The only thing that we care about in this type of strategy is finding the right place to buy. Imagine you're given $50 billion today and you're told, go and invest in gold today. Would you just buy anywhere? Exactly. You would at least take your time to research on which would be the cheapest price for you to buy, so that you make money. Now, with your $10, $100, $1,000, think the same. It's an investment you're doing, and you need to find the right place for you to buy and make money, not in the longest time. So what you usually do is find that place, buy, because there's someone who might see, yes, we're expecting retracement, but we'll still go up, and maybe they might buy somewhere here. This retracement might cost them the entire account, probably even they can't even, just one break of structure, maybe the account is gone. But they anticipated and they knew that, yes, we're going to have a retracement and then a continuation. But now their entry was wrong. Yes, you knew that, but now when you add that entry, you messed it up, right? So the best way to like solidify a good strategy is trying to simplify it. Find your regions and be patient to wait to buy at those regions. Find another place that, because again, what makes me old, it's not because that I'm greedy and I want a lot of money. No, that comes as a result of waiting. Sometimes is you figure this is where you want to buy, right? You've just figured this is my zone that I want to buy. So I buy, but now because I bought, I need to know why is this price going to? Because we've noticed that this is where the price is coming from, and then it's coming to this region. But after this destination where this retracement is coming to, the new displacement, where do you think it will displace the price to? Of course, if we are bullish, we have to break this structure. So I have a choice. If I get in here, I can exit up there. So whatever happens in between should not make me panic whatsoever. Why? Because I had a narrative and I know where the price is coming from and where it's going to. And if whatever it's happening here, it's noisy, climb higher to the bigger time frame. So if you're 15 minutes and it's too noisy, go to 1 hour. Things will be different. It will be slower and things will be even clear. You will now see things that you didn't see. So that's the whole point. So in the beginning of the week, I shared, so let me delete this first. Sorry. So I shared indicating that I'm looking at this level, this as my low dealing range, and this being my highest part of the dealing range. So I wanted to see the price come to this level, you see, from our zones. But again, I made some few scalps right here. But you can see where is the price coming from? It's coming from here. And where is it going to? To retrace to a point where it takes liquidity. But this is a discount zone. Remember when I told you guys that this could be one of the cheapest prices that you buy in February, because this is a new month. It means even if we go now to we expand moving forward, we will have created the low of this February. But I don't want to under a lot of things. But those guys who know, there is the AMD structure, the accumulation, distribution, and accumulation, manipulation, distribution type of trading, where there is a part where if it's a new month and we are bullish, we might be bearish in the early stages in preparation to distribute the price before the end of the month on the opposite direction. So that is what I was trying to emphasize as well. But again, the same, we talked about liquidity concepts, and if you can remember and if you can go back, you can clearly see the reaction of the market when it took that liquidity. And now when you go now to a smaller time frame in the same region, now you start seeing immediately after the price went to that place, took that low, you can see the behavior. So personally, I took this trade because this is exactly what I was looking for. But now I took this trade to hold and have another now internal trades in between. But the whole point for this big trade is to exit at least when I break structure right here. That's the whole point. So now as a result of that, of following this structure, as a result of that, I make money in the process. That's the whole point. So in smaller time frame, there is a lot of noise. There is a lot of people have fear internally to trade internal. It's because either you have a small account, your entry was really bad, because there is someone probably right now is in a buy, and this is where maybe they've bought. There is somebody else maybe bought below here, maybe you could have these whole people buying. So the first one to panic will be these who bought high, because their still expectation is to have a bullish momentum. But in any time this price makes a retracement, the first person to panic or the first person to lose in case of a retracement is this person. So this is how I'm trying to show you, yes, you can buy and sell at any place you feel like, but there is an optimal place where you could buy, and you can't even have any fear because it's not even close to your entry levels. Because clearly this trade was a very quick trade. It went even lower, but when it was coming up, I bought immediately. It never went again to drawdown, not even today. It's been now like 2 days, right? It's been now 2 days, because this was on Monday, it's Tuesday, and today is on Wednesday. So you can tell when you have a predetermined entry, the fear vanishes, because now fear vanishes because now you're dealing with experience of seeing something repeat over and over and over again. So nowadays, I think like a big institution or someone who, if you're given a lot of money, would you really buy here, or you would rather wait with your 10 billion that you've given to have a position where whenever you enter that position, it never comes back to your position for quite some time until it hit your take profit? So I think in terms of investing, because I don't want to risk a lot of money in pursuit of smaller money or the same money, if that makes sense. It's a risk to reward, but I take it even deeper in trying to understand where is the market really coming from? What is moving the market? Because again, you have to understand what is actually moving the market. Because what moves the market, especially in gold, first is the biggest problem is fear. Fear kind of moves the market a lot, actually. And in like these economical instabilities as well, they make a lot of they push the market. So you have also to be on the lookout, know what's going on, understand the markets. We will make a session where we will talk just news to try and understand how to dissect news in real time. But for now, I'm just trying to show you guys how we can do SMT, how you can wait for the right opportunities, because I see every time most of you guys are sharing your profits with me, yes, but again, you're trying to, there's 3 people in my DMs. There are people who are showing me their withdrawals. There are people who are showing me their analysis for each day, and there are other people who are always confused. They I don't know why, but honestly, this is true. There are people who are so stuck, and it's because they are taking content from all over the internet, and they are taking everything serious until now they can't even know how to function. So they see someone using a footprint, and they learn, but they also studied about break and retest, trade line kind of strategies. They come again, they've learned SMT, they've learned ICT trading, smart money concept, and all these things, they conflict. And now imagine you're trying to make something out of all those things, and you're a beginner. You feel lost every day. For real. But I'm trying to show you now, guys, you don't have to take all, because there are only 2 ways actually to there is only 2 ways that you can be involved in the market. It's either you buy or you sell. Those are the only 2 ways. Now, reasons for you to buy and sell, that is what people cook up, strategies and reasons to do that. And the more you take all this nonsense, sometimes they dilute even the quality of what you're doing, and then you there's a point where you're lost It's called information overload phase, and it's popular in forex, and most people don't talk about it because probably you're not there yet, or when you got there you quit. Others, they don't even know how they got past it. But I was aware when I was in that stage, because I had learned more than most of my peers. I had persevered those long classes for all these strategies, until when you are alone and you have to trade by yourself, you feel like you're not sufficient enough. You don't even understand. You're lost because you need someone to guide you. And because of learning too much sometimes, and you're learning things that are rushed, because when you watch my TikTok videos and you think you learn from those videos, they are like 20 times rushed. In fact, that's a very one video that I post that it's like 10 minutes, it's like 1 hour. It took 1 hour for that screen recording for you to see it in 10 minutes. It took me 1 hour to wait for that setup from when I entered and exited. It takes me like an average of 1 hour. So when you consume 10 minutes of it, you want to get those results as well in 10 minutes. You forget that whenever we teach things, we hurry things up. There are things that you need to be in present so that you feel them. You have to be present to see how patience really works, because you have to wait now. Patience kicks in when you press that buy, and expectations start kicking in your brain. So you have to wait. So however much I am a huge ardent believer of learning phase, also you need to understand that it will come at a point where you've learned so much but you feel like you know nothing. When that time comes, you need to do one thing and one thing only. You need to go somewhere and filter everything out. It's called a filtration stage. In this stage, you simplify everything to the basics of one, getting the best entry. Whatever strategy that you use, go back and see those entries, how they look like. Go back and see how the stop loss, the amount of stop loss that was designated for that trade to happen. What was that stop loss? Look at all your trades, all of them. That is one determiner that you're looking for. Whatever strategy you realize that it add minimal stop loss every time, try and see the fundamental reasons of that kind of a setup. Find the backbone of that A setup, because that's your A setup now. There is a time I used to get into trading, because I was used to trading currency at the time. I used to have a massive stop loss like this one. So in most cases, whenever I hit my stop loss, the entire account was gone. So yes, even though I win, I also didn't win as much, because my take profit as well was also compromised. Because check this thing out. If this was the kind of setup that I use, compare someone who has this kind of trading setup and someone who has this kind of a trading setup. The profit margin increases and the stop loss decreases. It's the same setup, but whoever made an entry somewhere like this place and this kind of entry, this is the best strategy, regardless of now, like, putting your feelings aside for whoever created it or whatever. The whole point is making money, right? So whatever you're looking for is, first of all, your first goal is reducing your risk. That is one thing that you're looking for. Reduce that risk. So when you get to filtration stage and you go and look for those setups that have minimal type of stop loss, now see the fundamental things that makes up that setup. Now try to look back on how many times does that kind of a setup appear, in what kind of interval, because a good setup that is in like 4 hours, it appears like twice a month. And this is what I want you guys to understand. You don't have to press that buy button every single day. And you will see this from the last videos that I made. You just wait for one time, you buy low, and just go on with your life in the next 2 weeks, because that one setup will make you way more money than whatever you're trying to do every single day. Because we did not escape 9 to 5 to again spend 24 hours in chat every single day. So we have a life, right? And what we want to do is to maximize on that one sure bet that we have. Because clearly, if you see this kind of a setup and see this is the lowest that we might be in the longest time, then you buy and don't sell. I don't know why people are rushing to sell. Don't sell. This is an investment and a business. So if you can buy and sell like in two months later or 1 month later, why are you selling now? So you can wait, and then when you get it low, just leave it. Let it expand, because we know the nature of what we are trading. So, but the only time you will get that confidence is if you understand what is working well with you. Now, forget about what I say, what whoever mentor you're looking at is saying, or what they are trying to do. You follow your instinct. After learning all these things, taking my advice, taking somebody's else, and now putting them together, find something that works for you, because the market is on in 3 sessions a day. Like every time you will find that candle printing, and you can make money any day, anytime. But for you, find that specific intervals that your setup kind of works. There's a times that you will understand in London session, maybe it consolidates, maybe on New York session, that's the best time for you. Maybe you will wait for price to be cheaper than it is, because like right now, I'm not interested to buy. And this is my philosophy. I'm trying to show you guys how I really trade. So the first things first, like we've said, let me show you. So I wait till my point of interest is reached. I have to. Otherwise, I will be into unnecessary trading stages, which even my mental health will be disturbed. So rather than being in a position where everything is tough for me, I would rather wait for the price to come to whatever point of interest that I was that I had predetermined. Because when you predetermine things before, you can even know the kind of risk you might be into, because at that time you will have said and realized, maybe, yeah, this is the kind of risk I'm willing to take, and now you wait. Whenever the price comes to your entry, all you have to do is how Alex says, set and forget it. Just leave it. Let it print. It might take, because now it depends again with the kind of time frame you are, or the kind of time frame that you're monitoring the trade in. If it's in like 4 hours time frame, and it might take a number of couple of candles to print, you might realize even if you held like 0.1, probably by the time you're here, you'll be like $10,000. So you have to wait. You have to wait for those candles to print entirely. So that's what I do. So this kind of a setup, you wait to discounted region, you buy, and you wait. So you might see me buying on Monday and don't trade. Like you might think I'm not trading in those other days, but it's not that I'm not trading, is that I'm holding and waiting for this to pan out, because I'm ready for whatever it will bring out. Because now this is where now I'll start taking my partials. It's either I'll take my partials or I'll just leave it. So in 2026, we are about to see the economical industry being disrupted. I think we can see even by the kind of movement we've seen in January. January as one of the most crazy moves we've seen in the history of trading gold, and I'm not seeing anything less in the following months. This is just the beginning. This is now we're in the second month of the year. We are already past $5,000 per ounce in gold. What do you think by the end of the year? 10,000, maybe 20,000? We just started. So I just want to have a new way to trade. Just hold one trade. Whenever you see this best type of trading and you see one of that perfect sniper entry, it can change your life. Just one setup, just one. That's why I'm trying to show you. I'm not teaching you to be scalping in situation whereby the only best thing you're doing is $50. No, I just want you to show, even if you take one trade, just wait patiently for the right time and just one trade with 0.01. In a place like this one, 0.01 to this area, you have like $1,000 from 0.01. So it's not about the money, it's about, do you have the skill? What are you looking for? Do you understand where the market is coming from, where it's going to, and what it's doing in between, where it's coming from and where it's going to? Your job is finding a position where you can fix yourself in that distance and make money. It's as simple as that. Don't complicate now other things in smaller time frame trying to do magical stuff there. No, just wait for the right time, buy, and just get out, go and do other stuff. Because look, this is a setup on Monday, today is on Wednesday. Do you think I have any issue by holding these kind of setups where I'm holding a smaller because this is where actually I entered somewhere there. I'm not thinking about this trade at all. Why? Because I positioned it. I knew what I was looking for. This was my point of interest. This is where I wanted to see, I wanted to entertain buying. So I went to other pages and they were trying to advise their traders, stay away from gold. It's very volatile now. It can blow you. No, like I encourage you to be involved in these minimal prices right now. Because every time you see that retracement, again, remember, be happy. Every time you see deeper retracement, be happy because you ride it up again. You're having another second chance to ride it up again. I told you guys. So when we shared this, because I shared this on the group, when I shared this, it was literally, that is when I was buying. I first shared on the group, then I bought later. That's how early I shared this setup. And even I gave an explanation of now inversely correlationship between now gold and dollar. So inverse correlationship means, so if I go to the same time frame, so this is 1 hour, sorry guys, I stay close to an airport. Okay, so there is so this is 1 hour. So this is 1 hour on gold and this is 1 hour on DXY. And I want you to see something and tell me if, do you see any similarity between the two? So the thing is, they look the same. And now I brought an instant trying to explain this phenomenon to someone. And the thing is, they actually don't look the same. It because of my perception or my perspective at where I am. Because I'm just viewing these last dimensions right here, and you can see the same to gold. They look like they are the same, but what you fail to see is that the dollar has been bearish, right? Dollar has been bearish. Well, gold has been bearish, but just for 3 days, or rather 2 days. And it was just a collection. It was just a small retracement. It was a very minor retracement to DXY, but the dollar had one of the biggest retracement. I mean, gold had one of the biggest retracement, and it was because it was for collecting liquidity. We are still bullish. The continuation is bull. That's why we are still buying. But that retracement, it was momentarily. We were retracing to buy again. That's the whole point. And when it comes to gold now has been retracing upwards to sell again. Now that is now what people don't understand, how to use these correlationships together now. Remember, we are trading against the dollar. So whenever we are buying on gold, we would rather want to see an alignment for dollar selling. We want to see dollar selling so that we can have even a more momentum for gold to push up. But whenever gold is, we are bullish and dollar is bullish as well, gold consolidates, because of course we are trading against something that is gaining more demand, but also whatever we are trading against them is also on demand. So that demand kind of cancels out. So the price kind of seems like it's stagnant and it consolidates that kind of a way. So that's why whenever now we want to buy, we want to see alignment. And that is the thing that I don't know if anyone is trying to get what I'm saying. We want now to see the alignment of we are buying, but we are now selling on DXY. Like DXY has to change character and start selling so that gold can buy even more with push, if that makes sense. So that's the inverse correlationship. Inverse correlationship kind of gives you an hint that, I know you're buying, but also dollar is buying. So you might face consolidation. So whenever you see that, you'll be like, oh, okay, I now understand. But now remember, again, reading structure can be for any type of currency or anything. So in my watch list, if you check my watch list, these are the only things that I look at: gold, silver, Bitcoin, US30, US100, and DXY. This is not even US100 and DXY. Even 30, it's been a while. So these four are the only things that I'm interested in. And these things are related. So let me take out Bitcoin. Bitcoin, it's because I withdraw most of my money through Bitcoin. So that's why I have it here, but I can just take it out because I don't actually trade Bitcoin. So these are the things that I usually care about. So for me, I want to see gold and silver being directly correlated in a way that if I'm buying, I want to see silver buying. But now the two should be inversely. I mean, gold and silver is directly correlated, but gold, silver, they are inversely correlated to DXY. So they go different direction to DXY. So whenever you are aligning yourself to buy, make sure you're trying to find where they are all aligning. That's your perfect place to buy or to sell or whatever you're doing. Now, that's the secret that I use. And I've tried to tell you guys, I simplify my things. Now, my secret is out. Rather, you can use it or not. Now, that's up to you. So I mentioned the fact that I wanted to see still dollar kind of retrace up here, because this was my point of interest for dollar. I wanted to see it just go a little bit higher. And if it does a little bit higher, I might want to see also gold go a little bit lower. Just a little bit lower to these regions. The same place where I had again my entry. This is where I'm interested. Because again, if this is my dealing range that I talked about, if this is my dealing range, I only want to be a buyer on discounted regions. I don't want to be a buyer past equilibrium or past fair price. No, I want to be a buyer below that fair price so that I can have discount. So I buy here and I sell above there. So I can't buy here I cannot. So I just need to wait. So today's on Wednesday. I just have to wait to see if I'll also see a reaction on DXY. Before we go low, I want us to go high on DXY. So before we go high on gold, I want us to see to go low first, so that now we can align. So at that time, this is my point of interest, this region for gold to buy again. And this is my point of interest to sell DXY again. So I hope now that kind of makes sense. That's why I'm waiting. That's why I cannot buy again. Just have to wait. So my secrets are loud, guy. So take what we've learned here, utilize in your trading style. The point is stay longer, protect your capital. You will stay longer in the game. But whenever you feel like you want to press those buttons, go and look for a demo account. Just press it with demo account. But when it comes with your real money, wait. You have to have a list on confluences. You have to identify what's your range, what's your immediate range that you're dealing with. Where are you expecting to buy or sell? Do you have areas of interest that you see when the price comes to this area, I can consider buying? Or are you just opening your laptop and just buying anything that you see? That's the whole point. Whenever you start following your confluences, you will understand how simple trading has been. For now, it still might make no sense. Don't focus on the money part, focus on the chart part. That's why every time I show you my charts, I just want you to see what I see, so that you can see what I'm trying to say, and open one day at a time. Because again, you have to be submissive to the trades. Otherwise, these things will sound so far-fetched. But if you submit yourself to trading every single day, you see what it takes to trade, to print one candle, what it takes to wait for an entire session to trade. So there's a lot of moving parts that you start noticing when you're glued to that screen. Because I don't want to use the word glued to the screen, because I don't want people thinking that you have to be there 24/7, but you need to experience the trading of your session. Whatever session you're doing, you need to experience that trade from start to the end. That's why every trade that I show you on TikTok is that I was somewhere quiet. I was waiting for that thing to pan out. That's why even I could record it, because I'm there looking at it, each candle at a time, 1 minute at a time, 1 minute candle printing each time, each moment, and looking and managing it live. That is what traders do. That is our work. But now, because we are a group of smart traders, we want to do things differently. You'd rather spend more time right now mastering to understand. You see, the point is, tomorrow we don't know how the structure will be, but we know as long as we submit ourselves to watch the market, we will understand what the market is saying. Because you start identifying the love language of those trading charts, how they do. You start seeing things, you start seeing pattern, you start seeing things in repetition, you start seeing what the price is doing, you start seeing what the market makers are, where the market makers are interested to buy. Because whenever you're buying, you wait for a specific area if you have good money. That's the whole point. So stop thinking like this like an hobby. Take it as the main job that you have, and lock in, do it professionally. Have a way to record this stuff. You need to know what you need to know that things, you need to know when to enter, when not to, when to exit, when not to. You have to submit yourself, otherwise it doesn't work. So ladies and gentlemen, thank you so much for sticking around. Today we've done some amazing insights. we are early. I hope by New York we'll have the good retestment to have even a better entry. I will update you on the Telegram channel, because I'm expecting that retestment, because currently I'm just in 2 positions and I wouldn't mind to earn some more. But yeah, so far I've taken some profit out. So the initial deposit I deposited, it's out, guys. So this is a free trade. So yeah, February is a love month, so we will also do a giveaway this February. We'll give something out to some few of you guys, so stick around, subscribe, share this content with someone who thinks that trading is a cool thing to learn. Share all the platforms and let us grow together, guys. The whole point is learn the skill, master the skill, money will be just as a reward. And because we all want the money, we will have to master this skill together. So ladies and gentlemen, it's as simple as that. See you in the next episode.